Your notes, by the way, you say rate cuts are not canceled, they're just delayed. I want to move to the equity market. Apple, the big story today. Part of the Magnificent Seven stocks. I want to ask you, is there still concern about over concentration in these big cap tech stocks, or have their earnings proven that these are safe places to put money and that this narrative is still intact?
Well, I think the way we look at it is in our base case, where we see the inflation picture improving and rates start to be cut, we would expect the rally to broaden out and, could even extend to small caps, say, in the United States and Europe. But we've also had this real focus on quality stocks that have very strong balance sheets, stocks that have pricing power, are improving their dividends, improving their buybacks, have recurring revenues. And as we've seen, this week and I think last week, a lot of these large tech stocks still fit that bucket. And so we think they're still attractive, particularly in the longer term.
Get this. We are at a very tricky moment in the business cycle. It's the gut-wrench time where the brown shoots we were looking for turn into the compost of an economic slowdown. Look, it has to happen. And you know what? It's actually going to end up being good news because it means the Fed can start cutting rates sooner than expected. But it still hurts.
The house of pain.
That's why I want to walk you through the pain you're going to experience if you have that diversified portfolio. And if you watch Mad Money, I know you do. We can provide you with some Novocaine. There'll be anesthesia. And yes, there'll be up days like today where the Dow gained 32 points. S&P advanced 0.13%. NASDAQ dipped 0.1%. But you need to expect and anticipate vicious intraday sell-offs like we had today as the Fed plays coy and we await their next move. Or to put it simply, the Fed needs to cut rates because the economy's running out of gas, and that changes the kind of stocks that can work here.
The U.S. economy's future is uncertain, with various factors influencing its trajectory, including the 2024 presidential election, which is adding to the pressure on the Federal Reserve as concerns arise over its ability to remain independent of political influence. Thanks to this, as we saw in the video, CNBC's Mad Money host, Jim Cramer, specifically recommended stocks that are less reliant on the overall health of the economy, and one of the stocks he mentioned was Meta Platforms. Meta is going all in on AI to drive growth and engagement on its platforms, but it's also betting big on its advertising business, revealing new, groundbreaking AI advertising tools. This is great news for Meta investors who know just how important advertising is for Meta. So, in today's video, we're going to explore Meta's new AI-powered advertising tools and talk about how they could boost Meta stock. Additionally, we'll discuss analysts' opinions on the stock, so you can determine for yourself if Meta stock is worth getting into or if it's too late for newcomers. But before we do that, if you want to keep up with Meta's latest updates and keep up with the stock market's latest news, you can follow our Twitter account. We post multiple times daily about the biggest changes and catalysts in the market, so click the follow button if you don't want to miss the newest market updates. Now, back to today's video.
Let's get some insights in the news shaping the markets. For that, we welcome in Todd Walsh, CEO at Alpha Cubed Investments. Thank you for being here. So, look, you see the market fighting, climbing, the wall of worry. What would you say when you see some up arrows here today? How are you feeling about the market overall?
Well, it's good to see you, Nicole. Thanks for having me on. I have great news. The bull market is still in place, but wow, is this a stock picker's market or what? We had about 90% of the S&P reporting so far, with about 7% growth ahead of estimates, about 79% beating, right in line with the historical average. But what we see is if you hit your earnings, like Google and Amgen, for instance, great market response. But if you don't, like say Meta, Netflix, Lululemon, United Healthcare, Starbucks, a bunch of others, you really get taken to the woodshed, don't you?
Yeah, without a doubt. There's certainly some high expectations for some of these companies, but the idea is that the fundamentals should improve throughout the year, and that in turn will help markets. Are you in that camp that the S&P could head higher from current levels?
We think we're firmly in a technical bull market. It doesn't mean the market needs to go straight up, right? We can have periods of consolidation, but we've got some pretty tremendous things happening under the hood. Everyone is laser focused on AI, and rightfully so. We've seen great returns there, and it's a theme that we're going to be seeing play out, for a long time, at least a decade plus. But under the hood, we've seen other areas of the market come to life. The S&P Value Index, since November 1st, when Powell pivoted to more of a pause stance, has kept up in terms of net returns with the white-hot NASDAQ 100 index. And a lot of people aren't seeing that. So our message is, let's not be laser focused on the rearview mirror and what happened in tech. We might see some consolidation there over the summer. We've got an election coming up. We've seen some sticky inflation numbers and then some relief there. We might see some volatility over the summer, but there are other areas of the market that are definitely working right now. That's the chart that I'm referring to with the value index keeping lockstep with the white-hot NASDAQ 100.
Recently, Meta's commitment to AI investments has been increasing rapidly. The company's CFO, Susan Li, said during the 2024 Q1 earnings call that the company now expects total expenses to be between $96 billion and $99 billion, which is up from the prior outlook of $94 billion to $99 billion. This increased spending can be attributed to Meta accelerating its infrastructure investments to support its AI roadmap. So, Meta announced that businesses can now use the company's new artificial intelligence tools to create and edit images for advertising campaigns. Businesses can feed the AI an image of their product and generate new backgrounds for it. And the model also offers image expansion, which resizes the image to fit a range of sizes for different use cases. Additionally, Meta plans to enable businesses to use text prompts to further customize their images, and mentions that this feature would be available in the coming months. On top of that, the new text generation features will allow businesses to create ad headlines as well as the main ad copy. In addition, they will replicate businesses' various tones and voices by highlighting key selling points based on previous advertising campaigns. And this feature will be powered by Meta's large language model Llama 3, and the company said that it hopes to make ad text generation available worldwide by the end of the year. Of course, there are multiple downsides to this, which were pointed out by many Meta stock investors. So, let's get into the cons of Meta's new advertising tools. Hello everyone, and welcome back to Investocracy.
And you also bought some Meta, even on that big dip. You're not discouraged by the investment in AI? You like it?
No, look, it's, again, to Josh's point, if you run a business, right, or as my former caddy, Carl said, scared money don't make money. So you've got to invest to generate return. Right? You have, and we'll talk about it later, Google, Microsoft, and Meta have the wherewithal to invest large sums of money to be leaders in the space and extend their lead. They're already leaders. So why wouldn't you? So to me, it's asinine to sell the stock because they're investing in their business, and the largest shareholder in the business is making the investment, that being Zuckerberg. So to me, I bought it at $4.16. I just thought that it was way, way overdone selling it. They had a great quarter. The guidance is also pretty good going forward. Yeah. So because they're increasing CapEx, for the right reasons, that'll be exponential in terms of earnings gains going forward. Why wouldn't you do it? It
did seem a lot of your sort of trading colleagues felt that the move was overdone for the sell-off because the quarter was strong. You have to invest in AI for the future, so take an opportunity. Now,
here's what I will tell you. It's a supersized position. Okay. And what I mean by that, it's irresponsibly large at this point. Okay. So my core position stays, and this will be, at some point I'll exit. I've already got a gain on it, but I think my gain could be dramatic from here too.
Investing heavily in AI is one of the ways Meta boosts its advertising business by building new advertising tools. However, there could be a few downsides to this that Meta stock investors should keep in mind. First of all, executives announced that the new AI-powered advertising tools would launch in test form without the watermarks that the social media business applies to all images created by its user-facing Meta AI helper, which it has hailed as a crucial safety element. So, the tools could be used by anyone, even Meta competitors, without giving credit to the company. With that being said, the head of monetization at Meta, John Hageman, stated that the firm was still figuring out how labeling for advertising would work, and that by the time the tools go live internationally, they will release the standards. But there's also another downside to this. As a consumer, you might be thinking that advertisers might customize the generated output with the upcoming text prompt feature by using multiple product colors, perspectives, and scenarios in order to trick customers into purchasing fake products or products that don't exist. However, Meta acknowledges that this is a potential use case and confirmed that there are robust safeguards in place to stop its technology from producing offensive advertising content or poor quality photographs. and this includes post guardrails, which filter out generated text and picture content that doesn't meet its quality level or that it deems improper, and pre-guardrails, which filter out images that its AI models don't support. Now, all these AI advertising tools could definitely help Meta grow immensely and increase its advertising revenue even more. Let's find out how. But first, if you made it this far into the video, thank you. These videos take a lot of effort and time to make, so if you enjoyed them, please hit the like button and subscribe to the channel. This goes a long way in helping us grow. That said, back to the video.
So where are we? Are we at a place where we are overhyped? As Stanley Druckenmiller has said, I mean, what's your take on where we are right now?
It's an amazing technology. We're still coming up with applications. We're still coming up with use cases. They're serving those use cases, but clearly valuations are investing way, way into the future around AI right now. But that's okay. We'll grow into that, I think, eventually.
You think? Okay. That's nice
Karen,
to hear.
So let me ask you, we heard Druckenmiller talk about, down the road, it makes sense. The valuation right now doesn't. It would seem to me very hard to know when to get in and out. So is your strategy just sort of stay the course and put up with potential volatility?
AI for me right now has open-ended upside, and I seek that out. And so it might break, but until then, I'm playing the upside.
Advertising accounts for the vast majority of Meta's total revenue, which we can see in the full year 2023 with Meta generating over $131 billion in ad revenues. Additionally, advertising revenue was $35.6 billion in Q1 2024, compared to $28.1 billion in Q1 2023. And this growth helped total Meta revenue grow 27% year-on-year from $28.6 billion in Q1 2023 to $46.4 billion in Q1 2024. Now, with the continuous integration of new AI-powered tools in Meta's advertising, we will be able to see those numbers bumping up once they are implemented on Meta's platforms. New advertising tools will also strengthen the relationship between Meta and its business customers who advertise on the company's platforms. And since Meta already has so many companies as customers, it could easily pitch the new AI tools to them and get them to work with them, unlocking a new revenue stream. Meta has around 4 billion monthly active users across its platforms, so there's an unbelievable opportunity for the growth of the company's advertising business. With that being said, many Wall Street analysts are bullish on Meta stock, as the average price target for the stock is $530.93, which is an upside of around 12.3% from where the stock is trading as of the time of this video. Last week, an analyst from RBC Capital updated his price target for Meta stock, and he actually cut his target. However, this doesn't necessarily mean he's now bearish on Meta stock. RBC Capital's Brad Erickson reduced his Meta price target to $570 per share from the preceding $600, which is a $30 downward adjustment in the stock and could be considered a major move. However, Erickson stayed the course by maintaining his buy rating on the company. Also, the lowered target still implies a nearly 31% upside over the next 12 months. In the note he wrote, Erickson said that he thinks that Meta can be an AI winner, as the technology could enhance so many corners of Meta's business while opening new sources of revenue. Still, he said that AI is a feast or famine technology for Meta and that it's foundational to that higher capex guidance that investors thought was too much, leading to a massive sell-off. We can agree with his opinion on Meta's potential to become one of the top AI winners, but it can't do that without investing heavily in AI and increasing its capex. This is simply something that Meta needs for its future and to remain ahead from competition in both the social media and AI markets. Meta's recently announced AI-powered tools are proof that the company knows what it's doing when it comes to capitalizing on AI. What's more, Meta's management team isn't shy to shift resources to more high-potential areas when necessary, meaning that this stock could be an excellent bet on the future of social media. So, what do you think about Meta stock? And what are your expectations for Meta's future? Let us know your thoughts in the comment section. And don't forget to tell us what your valuation for Meta is. If you would like to know more about the latest updates about companies like Meta, then go ahead and click on the next video on your screen. See you there.